But my name is Carrie Lang. I am the Agency Development Coordinator for National Flood Services. And we have a couple of my team members on the call as well, Tori Manganelli and Courtney Gus, with us today, all from the training development team. And we are excited to hear what Corey Garriotis has to say about floodplain management, basics for Alabama, and we can just go ahead and get on started. And I'll go ahead and go to the next slide. And Corey, you can
Is it working for you, Carrie?
get to presenting. Oh, nope, it's not.
Got stuck.
All right, just if you want to go ahead and give yourself a little introduction.
Oh, yeah. So I'm the state coordinator. Each state in the country. My name is Corey Garriotis. Each state in the country has a state NFIP coordinator, and I am the one designated for Alabama. The agency I'm in is ADECA, and it's in the Office of Water Resources. I have over 20 years experience applying floodplain management principles. I've been involved in engineering, consulting firms. I worked in Virginia as the state coordinator for 5 years, and the floodplain engineer for 2 years before that. And overall, I have 30 years experience doing engineering, and all the way from geotechnical to environmental, and so quite a long involvement with engineering concepts and tying them into floodplain management now the past 20 years. Next. All right, so to get started, just wanted to put a little humor in to just get a point across. Mainly there's different opinions and perspectives on flood insurance, floods, and floodplain management. As you can see in the upper left, you have somebody that, they kind of apparently got caught off guard. They were given warnings, kind of like what's happening to us now in Alabama with this Hurricane Zeta coming up out of the Gulf. Some people just don't pay attention, and they feel like the storm sneaks up on them. Whereas you have other people that are kind of disaster weary. The poor lady on the right-hand side has gone through several 100-year floods, which is the landmark flood for FEMA regulations, and you can see she's had multiple years of going through that. Next. All right, so the topics we're going to cover today are National Flood Insurance Program overview first. Then we'll give a quick overview of what's going on in Alabama, go through how the NFIP works and how it didn't work the way it was supposed to, NFIP reforms to try to fix that, and part of those reforms, a big thing that's underway, it was postponed a year, is the NFIP risk rating reform called risk rating or flood risk rating 2.0. And that'll definitely be influencing and affecting the insurance industry. Identifying and mapping flood risk, floodplain management, flood risk reduction through grants, and then resources for insurance. And just a wrap-up slide of NFIP benefits through sound floodplain management. Next. All right, so an overview, the National Flood Insurance Act of 1968 established the NFIP, the National Flood Insurance Program. It was designed to reduce taxpayer-funded relief for floods. Prior to 1968, there was, and a couple of the resources I provide at the end go into great detail about the history of the NFIP, as well as what occurred leading up to the National Flood Insurance Act of 1968. There was a lot of floods, especially on the Mississippi and the Missouri rivers and the Illinois rivers and so on, that They were just repetitive losses throughout many cities. And so they realized that they needed to do something more than just try to contain the flooding with levees and flood walls and such. So that was what led to the act in 1968. And there was some regulations that were set up in Title 44 of the Code of Federal Regulations. Most of them are, the NFIP regulations are covered in Chapter 1, sub-chapters A and B of Title 44. And the NFIP has three primary components: providing flood insurance, requiring floodplain management as a condition for communities to get flood insurance and other federal assistance, such as disaster relief and disaster grants. And this component, some people, there used to be well, there still is a stool. They call it the NFIP's three-legged stool is insurance, floodplain management, and flood hazard mapping. And so the one component that was kind of left out really makes it a four-legged stool, but we'll just incorporate flood hazard mitigation as part of floodplain management because it is part of that overall overarching component. Also providing flood hazard mapping as the primary tool to use both in insurance and in floodplain management. So one important thing is that NFIP flood insurance is only available where local governments have adopted adequate floodplain management regulations. So it's important for the local communities to also play a part and to set themselves up to be able to participate in the program. Next. So there's more than 20,000 communities across the country that participate in the program. I think it's actually over, yeah, down there at the bottom, 22. So the number went up in the past 15 years. I'm not sure I have that old number. The National Flood Insurance Program coverage is available both within and outside of the high hazard areas. So there's a lot of confusion in different different places around, even in Alabama. Some homeowners have been told by insurance agents that they can't get flood insurance either because they're in the floodplain, or they can't get flood insurance because they're not in the floodplain. So neither one of those is correct. You can get it whether you're in or out. There's some other particulars that where you can't get flood insurance for a structure. One of them is obviously if you're not in a participating community, and the other is if you have a structure that's wholly or I can't remember what the percent over water. So if it's over water, you can't get flood insurance for that structure either through the NFIP. I think you may be able through private. Nearly 70 private participating insurance companies are in FEMA's Write Your Own program that sell and service NFIP policies. FEMA does retain the responsibility for underwriting losses though. So FEMA also offers flood insurance directly, and that was the way it was originally set up, and then they branched out to include Write Your Own. So more than 22,000 communities participate, and from that, there's over 5 million policyholders, over 1.3 trillion in coverage against flood, over 3.5 billion are being paid in premiums, and over $71 billion have been paid totally in claims since 1978. Next. So the Alabama Office of Water Resources is the agency that's responsible for coordinating NFIP aspects of the floodplain management for the state of Alabama. And this is a requirement for all states per Title 44 CFR 60.25. And basically what those regulations they give us our marching orders pretty much. This is most of them. I think I might have not been able to include 3 or 4 more. But basically to enact legislation for the communities for development in the floodplain areas. That has been done for both municipalities and counties. Encourage and assist communities in qualifying for participation, and to guide and assist counties and municipalities as well as agencies in developing, implementing, and maintaining local floodplain management regulations. Provide local governments and general public with program information, so basically technical assistance on what they need to do in flood-prone areas, and assist in the delineation of riverine coastal flood-prone areas. And we do have a cooperating technical partner program in our agency, just a few doors down. The lady that oversees our mapping program, where we have multiple, probably 6 or 7 mapping projects that are done by watersheds being done currently in Alabama. We're required to establish minimum state floodplain management regulatory standards consistent with the minimum for the NFIP. And so we've established a model ordinance that we distribute and get the communities to agree to implement that in their communities. Assure coordination and consistency of floodplain management activities with other state, area-wide, local planning and enforcement agencies. Assist in the identification and implementation of flood hazard mitigation recommendations. So we work with the Alabama Emergency Management Agency to do that. Participate in floodplain management training opportunities and other flood hazard preparedness programs. So I'm fulfilling that with this training. And I do give other workshops, and we give a class, 4-day class once a year called the L273 class. And it takes a deep dive into the basics of floodplain management. And then we also have 3 additional advanced concept classes that are also 4-day ones that we've broken down into 2-day workshops because they're broken down into 1-day modules. So there's 4 different concepts that we go over in each of those 3 classes, the 4-day classes. And we've basically broken those down into, let's see, so anyway, it's 6 different 2-day workshops that we do out of those. So we do a lot of training in Alabama. We've also done elevation certificate training, substantial damage estimation tool training, and we do want to give some coastal construction training also as part of the Hurricane Sally disaster. Next. So the NFIP policy and claims currently in Alabama, there's 433 communities in the NFIP in Alabama, 52,877 policies in force, over 13 billion in coverage, over 34 million being paid annually in premiums, over 44,000 total claims, which had a little over $1 billion paid since 1978. And the top 5 counties for the number of policies, as you can imagine, Baldwin County is the highest. And you can see it 3 times greater than even Mobile County, which has a little over 8,000. And Limestone County, a little over 4. And Jefferson County, a little over 2,000. Montgomery, around 1,300. So those are the top 5. Thanks. So how the program works, it's administered by FEMA, which is part of the Department of Homeland Security. It's expected to be self-supporting in an average loss year. Flood insurance covers direct physical losses by flood and losses resulting from flood-related erosion, which occurs when you have high velocity waters cutting through channels, rivers, creeks. You see a lot of that occurring with along the roadsides where the actual road collapses because the ground underneath is undercut because from the channel. And in order to be considered a flood, waters must cover at least 2 acres or affect 2 properties. Homes are covered for up to $250,000 on a replacement cost basis, and the contents for up to $100,000 on an actual cash value basis. Next. Oh, I'm sorry. Go back. I did want to go through that infographic there. So one interesting, I thought this was a great infographic I wanted to share. 1 inch, and this was done in Dare County when Hurricane Matthew came through there. They were able to kind of get a ballpark estimate of how much damage has occurred just from 1 inch of water damage. And using a 2,000 square foot home, on average, $21,000. That's a lot of damage for 1 inch of water. So that's one of the reasons it is important if you're in or near floodplain to be sure to get flood insurance. And it's a good selling point to get that kind of information to your clients as well. And just the little graphic down below kind of shows the impact of having a structure elevated 2 feet above the base flood elevation is 600. And this is relative. The insurance rates, this graphic may be about 5 years old or something. So it's just relative is the point to get from this. And of course, there's little caveats there about $250,000 building. So $624 premium for 2 feet above. The same house at BFE is almost $2,000, and then 1 foot below, it's over $4,000. So you can see the impact of elevating a structure, which is a good piece of information to tell your clients, your customers, because they will certainly want to know that information if there's opportunities for them to get elevated. So next. So continue with how the NFIP works. Excess flood insurance, which is done primarily with private insurance, is available in all risk zones from some private insurers for NFIP policies who want additional coverage or where the homeowner's community does not participate in the NFIP. Coverage for the contents of basements is limited. That's one of the areas that FEMA does not like, and for good reason. You don't want to have basements in flood zones. They cause a lot of problems, not just because of the contents down below getting damaged, but foundational problems and things like that can occur in basements. And there are some mitigation measures that can be taken, such as filling in either with dirt or gravel or even concrete, but that's a little more expensive, the basements, to help protect them from the water pressure from collapsing the walls. Coverage limits for commercial property are $500,000 for the structure and another $500,000 for contents. So commercial properties obviously do have more value than your average home. Policyholders must wait 30 days before the policy takes effect, and the reason for that is because in several floods 20 or so years ago, some people were catching the weather and finding out it was going to be raining and look like a flood was coming, and they'd run out and buy flood insurance, and they would get hit by the flood and be flooded, and so FEMA, the NFIP, was paying out millions of dollars in damages and only having hundreds of thousands of dollars paid towards premium. So they put that 30-day requirement in there. So the graphic on the left kind of is a nice summary, and when you get the PDFs of these, you'll be able to go through this in more detail. But anyway, just some of the highlights is flood insurance is a smart investment. You protect your home from one of the most common natural disasters. Damages do add up. A mere 5 inches of flooding in your home can cost you $11,000 in damages or more. Flooding costs homeowners over $6 billion of damages per year in the United States. A quarter of all flood claims are made by homeowners in medium or low flood risk areas. So those are the areas outside of the 100-year floodplain. Floods may occur anywhere where it rains. And let's see, so I'll let you have that information there. So that's a pretty good graphic. Next. And here's another one that kind of goes into what flood insurance does cover and what it doesn't. Homeowners insurance is not flood insurance. A lot of people still, despite how much marketing has been done for flood insurance, still don't realize that homeowners insurance is not going to cover flooding. Flood insurance must be purchased separately. Each structure requires a separate flood policy. However, you need only one contents policy. See your insurance agent for specific information. So, and it goes into what's replacement cost and all that, and all the different items, the contents that are covered. Basement contents are not covered, and then there's some things outside, and you have to get a separate policy for a detached garage. If it's attached, it's part of the home, so that would be covered under the primary home. Next. So continuing with how the NFIP works, remember it's a it's an insurance, a floodplain management, and a mapping program. And it's all, the maps are made to basically run, be able to do the insurance portion of it, but it's also used for floodplain management. So, so FEMA has become very good at doing maps. FEMA assesses flood risk for all the participating communities, resulting in the publication of thousands of individual flood rate maps. Now we've gone digital. One of the slides coming up is about how you can actually get your own digital map. I did it in about 5 minutes, the one that I'll be showing you. And it's real easy to do once you become adept at it. It may take half an hour to an hour to do it the first time, but once you get 3 or 4 of them under your belt, you'll probably be able to do it in 5 minutes. And different degrees of risk, depending on the flood zone. As the one shown on the right there, you have the AE. You have in this one, there's not a floodway, but you do have a zone X that's shaded, and that's indicates an area for a 500-year flood. The zone X unshaded means that's minimal flooding, and that used to be the zone C, but now they've gotten rid of the C and made it a unshaded zone X. So high risk areas are known as special flood hazard areas. Floodplain maps are redrawn periodically, removing some properties previously designated as high hazard and adding new ones into the floodplain. So overall, with the new mapping, and some of your customers may have, complained to you, why am I being required to get flood insurance? And, I never had to do this before. And I get those kind of calls all the time. And it's basically because they've been mapped into the floodplain, but it's not a one-to-one for every community that gets remapped, but overall, nationally, it's almost a one-to-one. As many people are getting put in as are getting removed, actually, just because they're refining the delineations of the maps, because the topography information is what mainly drives where the boundaries are set. And the old boundaries that were real wacky and included people that were 30 feet above the water are now being refined and tweaking those to make them very accurate with when you have 2-foot contours versus what used to be 10 and 20-foot contours. It makes a big difference. All right, next. All right, so continuing, new technology enables flood mitigation programs to more accurately pinpoint areas vulnerable to flooding. As development in and around floodplain increases, runoff patterns can change. So if you can imagine, when you start adding a bunch of houses to an area that used to be a pasture, you're going to have a lot more impervious areas, which means impervious means the water doesn't go through into the ground as quickly. Instead, it runs off on the surface, and that makes it hit the rivers and the creeks more quickly. And so all that water that used to go into the ground is now running off and going into the creeks. So people tend to underestimate the risk. Almost every week, I have at least one person that I get assistance calls. I get, dozens a week of calls, and at least one of those is someone saying, I've lived here for 50 years and I've never seen it flood here. But then I pull up on the map where they live, and I see where, over the past 20 years, they've had a whole bunch of new development around them, or upstream from where they are. It doesn't have to be right in their general area. It can be upstream. And so that's something to think about when your customers are saying, why is this happening now? This is ridiculous to have this much flooding. Something must be wrong. And it's not. It's really just part of what happens when you have development. Unfortunately, in Alabama, the stormwater regulations are not too great, and the detention requirements for most counties and most municipalities do not require retention of the stormwater with new developments. So you put in a new development and all that water just goes into the creek instead of going into a detention basin where it holds it for a little while before it releases it into the creek. So unfortunately in Alabama, we don't have very strong stormwater management. That unfortunately causes more people to get flooded. The high risk areas have an annual flood risk of 1% and a 26% chance of flooding over the lifetime of a 30-year mortgage. So if you're going to live somewhere for 30 years, you have a 26, almost a quarter of a percentage of being able to, a 1 in 4 chance of getting flooded over that 30-year period. That compares to only a 9% risk of fire over the same period. So everyone seems to get the fire insurance requirement. Everybody is required, to get fire insurance, but the flood insurance just seems to not be as clear. People who live in areas adjacent to high-risk areas may still be exposed to floods on occasion. About 25 to 30% of all paid losses were for damage in areas not officially designated at the time of loss for special flood hazard areas. So this is, and actually those numbers, 25 to 30% are low for some of the large disasters we've had lately, like Harvey. I think the numbers were up in the upper 30s. The number of people damaged from that flooding, from that event. Matthew and some of the others were also that way in the mid to upper 30s. So the people outside, especially the people that are within 100 yards of a floodplain, are the ones that get surprised, get caught off guard. So, and the little infographic on the right-hand side kind of goes over some of the same stuff. Next. So, this one is about how the NFIP is supposed to work, but it didn't in a few situations. You have Hurricane Katrina. The losses in 2005 greatly exceeded the premiums. Flood loss payments of $17.8 billion, the highest on record, resulting in a huge debt to the U.S. Treasury, and they were unable to pay it back. So there was large debt overrides, and hurricane or tropical storm Sandy losses in 2012 greatly exceeded the premiums. Flood loss payments were $9.5 billion. And over the past decade, 50% more $1 billion events, $1 billion plus events have occurred. So that's 50% more than what happened in 2001 to 2010. So there's been a lot of large events in the past decade. So changes were needed to the NFIP. You had a $22 billion debt that was rated by the General Accounting Office as a high-risk program in 2017. And so the NFIP was considered a high-risk program because of the level of debt it kept incurring every year. It was borrowing significantly and regularly from the Department of Treasury to pay for disaster claims. Instead of being able to be self-sustaining, they had to keep going back to the Treasury. In 2017, Congress canceled a $16 billion debt from the program, and in September 2018, it still had a $2.5 billion debt because of the continued $1 billion plus events that were occurring every year. Next. So some reforms had to be done. The reform started actually back in 1973 when Congress broadened and modified the NFIP to put constraints on access to federal funds in high-risk areas. They really thought that was going to work and that it was really going to get people to start buying flood insurance more, but there still was a lot of resistance. So the National Flood Insurance Reform Act of 1994 tightened enforcement so regulators could fine banks that consistently fail to enforce the law, and lenders can purchase flood insurance on behalf of homeowners who fail to buy it themselves. So I think that's what they call force policy or something like that. I can't remember but it's forced on them, basically. The Flood Insurance Reform Act of 2004 was designed to reduce losses to properties for which repetitive flood insurance claim payments have been made. And a repetitive loss definition is an NFIP insured structure that has had at least 2 paid flood losses of more than $1,000 each in any 10-year period since 1978. Then you had the Biggert Waters Flood Insurance Reform Act of 2012. It was designed to allow premiums to rise to reflect the true risk of living in a high risk flood areas and eliminating rate subsidies. A lot of subsidies, probably around 83% are true risk, and you have 16 to 17 that are subsidized policies. A lot of older properties that were developed before floodplain regulations came into effect for their community. The premiums were to increase gradually over the course of 5 years. Then that became too much. It was overwhelming for the policyholders. They couldn't afford it. A lot of people were losing their houses. They couldn't afford the flood insurance. You had people that were going from $1,000 a year up to $10,000 a year within a 1-year period that they were being required to pay for flood insurance. So the Homeowner Flood Insurance Affordability Act of 2014 delayed the increases of flood insurance premiums that were part of the Biggert Waters Flood Insurance Reform Act. No policyholder was to see annual premiums increase over 18%. So that helped slow things down a little bit. Other changes included more outreach for flood hazard mapping and NFIP advocate. So some things had to be changed, and so this was required. Next. So additional reforms are continuing to be done, especially in the past 3 to 4 years. There's been some significant things that are kind of paradigm shifts for the program. Some of those, the NFIP reauthorizations, that's been going on for since the program, and Congress periodically will make some tweaks to the program when they're doing the reauthorizations. We just had one back at the end of September, actually. That was, I think it was extended through, they try to get at least a year, but it's hard to get everybody on the same page. So they usually get at least three months or so in. So I think it's good through December now. congressional rulemaking. So, and this occurs occasionally. In 2019, federal regulators announced a rule requiring regulated lending institutions to accept private flood insurance policies comparable to the NFIP. So that was able to meet the requirements that FEMA had for any structures with a mortgage to be have flood insurance. NFIP reinsurance, this is something new. This is one of the new paradigm shifts for FEMA. The NFIP began a reinsurance program to put it in a better position to manage losses incurred from major events by transferring exposure to reinsurers. So they were basically trying to take the load totally off of the federal program and shift it more out into the private industry. And so this really has made a huge impact in some of the disasters. Some of them, you have to reach your a certain limit before this actually kicks in. So with the number of disasters that have occurred in the past 4 years, this hasn't been too bad of it. It's been pretty helpful for the program. NFIP catastrophic insurance is in August 2018, FEMA launched its first catastrophic bond to transfer risk from the NFIP to capital markets. So another big change for FEMA. Another thing that's really taken hold the past 4 years is private flood insurance. Flood insurance had long been considered an untouchable risk by private insurers because they did not have a reliable way of measuring risk. And that was one reason they didn't do it prior to flood maps being developed. And then even with the flood maps, a lot of communities were not being accurately mapped for the risk. And so private industry, private insurance still wasn't willing to get into the market. But because of some new modeling, very sophisticated modeling that has been developed in the past 4 to 5 years, they've been increasingly comfortable with using those models to underwrite insurance risk. And the modeling firms have become very, very good at predicting flood risk. Next. So one of the big things that they did legislatively was to pass the Disaster Recovery Reform Act of 2008, otherwise known as DRRA. It amended sections 402 and 406 of the Robert T. Stafford Disaster Relief and Emergency Assistance Act, shortened as the Stafford Act, and authorized FEMA to provide assistance to state and local governments for building code and floodplain administration and enforcement, including inspections for substantial damage compliance. It also provided for base and overtime wages for extra hires to facilitate the implementation and enforcement of adopted building codes for a period of not more than 180 days after the major disaster is declared. So this was huge because a lot of communities are not doing the enforcement in a post-disaster circumstance because they don't have the staff to do it or the funding to hire people to come in and do it. And so a lot of them were complaining, well, you're making me do this compliance, but I don't have the capability of doing it after a disaster. We're overwhelmed when it happens. So this was FEMA's way, and seeing how they worked with Congress to get this enacted and to help them to be able to provide the ability for communities to be compliant in their post-disaster situation, which is when all the damage or most of the damage occurs is in a post-disaster. So this policy enacted through FEMA's Public Assistance Program is intended to increase the overall speed of recovery by providing assistance to conduct building inspections, review disaster-related development in the floodplain, review applications for permits, and issue permits to adequately administer and enforce adopted building codes and floodplain ordinances. Also, it enhances compliance with state and local building codes and floodplain management ordinances by providing state, tribal, territorial, and local governments additional resources to carry out required activities after a disaster. So it basically said, hey, if you can't do it on your own, we'll give you the resources so you can do what you're supposed to do. So, next. So there was some further changes that were needed, and in particular, the FEMA's way, their methodology for rating properties flood risk and prices. The pricing was first developed in the 70s, the early 70s, and so that particular way of doing things, of doing the methodology, has been in place for 50 years. And so it was finally recognized. People have been trying to get this change for about 10 to 15 years now. And finally, there has been in the private insurance industry enough modeling developed, and FEMA has learned from that and incorporated some of their own. They're still working on it. They thought they were going to be able to implement it this year, but they just weren't able to get everything together with all the new ways of doing things in the way, basically rewriting the whole flood insurance manual, and just everything is going to be changing. It was just too much to try to get done by October 1st of this year. So it's going to be kicking in October 1st of 2021, and in March of 2019, the Trump administration announced plans for further NFIP reforms with the Flood Risk Rating 2.0. So it's a shift to a fully risk-based pricing of flood insurance. This is what the private industry does. And again, it goes into effect October 1st next year. It leverages industry best practices and current technology, implements rates that are fair, make sense, are easier to understand, and both for insurance agents and for the homeowners, and it better reflects a property's unique flood risk. So it's per property, whereas before, people that were in the same flood zone, whether you have 5 feet of water or you have 1 foot of water, you were rated the same in that flood zone. So this will be more on a building by building, structure to structure rating process. Makes flood insurance significantly easier for agents to price and sell policies. So I'm sure you guys will like that. It helps customers better understand their flood risk and the importance of flood insurance. And it will incorporate a broader range of flood frequencies. It won't just be the 100-year or 1% annual chance event. It's also going to incorporate, I think it's a 200-year and the 50-year and maybe 25-year floods will also be incorporated in. Next. So risk rating reform also has more variables in it. Risk rating 2.0, it includes differences between inland and coastal flooding. So recognizing the high velocities of coastal flooding from the waves, wave action, the damages that causes is much more severe. And that wasn't reflected as well in the way it's currently rated. The differences between pluvial and fluvial flooding, replacement cost value will be used, distance to coast, river, or stream. So, and this is going to, I wouldn't say negate the 100-year flood portion of the rating, but it's going to be tied more to the distance that you are and the depth that you have, and what your first floor height is, what the elevation is, the type of foundation that you have, as well as the construction type, whether it's block or wood or whatever the material is that may be more susceptible to flood damages. Again, multiple flood frequencies will be used, and then average annual loss will be incorporated into it. So there's a whole lot more information about this on the website that's posted there. So I encourage you to go there. There's a lot of resources, a lot of links on that page that you can access. Next. So it's important to make sure that the flood risk is accurately mapped. And so FEMA has really done a great job of hiring some good engineers on their own staff, as well as the contractors that they've hired. The contractors have developed such incredible skills with both coastal and riverine flooding and modeling them, and coming up with some very innovative ways of doing the modeling. So FEMA identifies flood hazards from riverine, coastal, ponding, lakes, and other sources, including dams, levees, through scientific and engineering modeling. FEMA partners with some states and communities on development of maps, but always works to make both part of the process. So we are a continuing or a cooperative technical partner, CTP. There's a bunch of others in around the country that are state CTPs, and there are some communities, some larger cities like Charlotte-Mecklenburg is a CTP as well. FEMA then maps those hazards on a flood insurance rate map. A flood insurance rate map firm is an official map of a community that displays the flood zones. Again, this was primarily just a paper product. Now, for the past 15 years or so, it's mainly used in GIS systems, and most communities have GIS now. Communities use the firm to adopt and enforce local floodplain management regulations. Lenders use them to assess property-specific flood risk and determine the requirement for purchasing flood insurance. Insurers use them to calculate the appropriate risk-based premium rates. FEMA and all stakeholders use them to communicate flood risk to property owners and the public. Communities adopt firms after 12 to 24 months of consultation with FEMA during their development and public input. So there's several months that go into it. You have the 24 months is basically once a project is taken, it takes sometimes 12 to 24 months to determine the limits, how much, how big the project is going to be. Next. So this is kind of some steps in how to make a flood risk determination. The low to moderate risk zones or information is provided there. And this is, uh-oh, we fell out. We're almost at the end. There we go. All right. Thanks, Carrie. All right, so anyway, these are some steps for you when you get the PDF. These will be some information. There's a phone number there if you're having problems, and you can also use a email there that, if you're having problems getting your own map, if you want to go that way. Next. And so these are the steps. You can go to the National Flood Hazard Layer, FEMA's National Flood Hazard Layer webpage. And the link to it is there below that graphic. And you see where the little red circle is. You push on that, press on that, and it takes you to where the arrow is pointing to a page that looks like that. Welcome to the National Flood Hazard Layer Viewer. And there's instructions up there that tell you what to do. And you'll basically click on the little pin that's shown there where the red circle is down at the bottom right, graphic, and then push run. So you want a format, and you want it to be a PDF. That's the easiest format. There's other formats. And if you look over to the right on the map, you'll see where the pin dropped. That's where I wanted it. So you pick a location, an address, whatever, you know, just a piece of property, whatever it is to drop the pin on. And then next. And then what you end up with is an official FEMA map. This is called a Fermat, and it gives you the legend on the right-hand side. And if you look in the middle where the red pin is, that's the same location where I dropped it in the viewer. and it generated this little PDF file for me. So it's a very simple process. FEMA has done a great job of making it very user-friendly. The previous version was not so user-friendly. This one is so much cleaner and quicker. It took me less than 5 minutes to generate this map once I decided on where I wanted to do it. So a lot of times just finding the location you want the information gathered is the problem, is what slows you down. Next. And these are some of the guidance information that are available. FEMA actually has information here for the real estate lending and insurance professionals. Down at the bottom on the left-hand side is the web page that you can go to get to that, the link for that web page. They have additional guidance like the fold-out brochure on the right-hand side, flood map changes and flood insurance. Very good information that's available on that website as well. And these are some things that you can use for your own information. You can hand out to your customers and get kudos for providing them with some helpful information. This is really good to be informed of when maps are going to be changing in communities that you're working in, communities where your customers are. So this is great information to hand out. Next. So the next step is with all this information, we need to do the management. We need to make sure that we're properly managing the risk. So floodplain management is a community-based effort to prevent or reduce the risk of current and future flooding, resulting in a more resilient community. Multiple stakeholders are involved, and these include zoning, building codes, and enforcement, education, and other tasks. FEMA has a minimum floodplain management standards for communities participating in NFIP. You can adopt higher standards that will lead to safer, stronger, and more resilient communities. FEMA's Floodplain Management Division provides tools and resources to help communities navigate the NFIP requirements. So that's who we work with at the region. The region is FEMA Region 4 is located in Atlanta, and that's who we work with to help us know what's coming down the pike with FEMA and for guidance materials and all. And this information is readily available. I'll be providing a website here in a page or two. Next. And resilient communities result from participating at all levels, such as states providing strong model ordinances to communities, adopting and enforcing higher standard building practices, to property owners elevating their homes. So on the left-hand side, you see some examples of structures that are being elevated in the process, what it looks like with all the supports there to lift it up. And then down at the bottom, you have one that's been completed. And so a lot of people don't think they're going to like the way it looks being that high in the air, but there are some ways to dress it up and make it look really cool. And I think that's a really cool looking house, the one down at the bottom there. Participating counties, municipalities, and tribal nations can become stronger and more resilient by taking the following actions: adopting and enforcing higher floodplain management standards than the NFIP minimum, such as higher freeboard, lower substantial damage ratios, etc. Maintaining rigorous enforcement of those standards. You can't just have the standards, which we find in some communities. They have the standards, but they're not enforcing them. Promoting open space through property buyouts and community planning. So good zoning and community planning is very important. Encouraging responsible building practices. Higher standards help a community recover faster from flooding events, lower impact to other properties and communities, and reduced financial and physical effects on individual property owners. So those are some of the benefits. FEMA is really pushing for higher standards now to make sure that they are not just doing the minimum, but are considering, being able to recover from disasters quicker because you don't have as much damages to deal with because you're implementing higher standards. Next. So flood risk reduction through grants. FEMA utilizes 3 hazard mitigation assistance grants to improve flood risk reduction. The Flood Mitigation Assistance Grant, FMA, is authorized by the National Flood Insurance Act. And the information, I'll just let, since we're running low on time, I'll let you just have that information. It really is targeting repetitive loss properties, doing elevation of buildings, and neighborhood scale flood defense investment is really what the FMA grants are for. The link for some really great material information on that is provided at the bottom there. Next. So this is a brand new program. This is the one that spent a little bit more time on this, building resilient infrastructure in communities. This is replacing FEMA's pre-disaster mitigation grant, and it's to support states, local communities, tribes, and territories as they undertake hazard mitigation projects, reducing the risk they face from disasters and natural hazards. The program's guiding principles are supporting communities through capability and capacity building, encouraging and enabling innovation, promoting partnerships, enabling large projects, and maintaining flexibility and providing consistency. Next. And the little infographic there was just for your information. It kind of goes through some little details of the program. The BRIC program aims to categorically shift the federal focus away from reactive disaster spending and toward research supported proactive investment in community resilience. FEMA anticipates BRIC funding projects that demonstrate innovative approaches to partnerships such as shared funding mechanisms and/or project design. More information is available, some good guidance on this new grant. And they're actually in the grant cycle right now, which is the grants are due by, I think it's January 31st. FEMA came out with this new guidance document for local communities, building community resilience with nature-based solutions. So this really is kind of the direction that FEMA is going, is trying to turn things back in the green space, getting away from developed areas adjacent to floodplains. Next. So continuing, this is a program that's been in place for 40 years or so. And it's Section 404 of the Stafford Act, authorizes these grants. And it's for projects to reduce or eliminate losses from future disasters. The projects must protect public and private property and provide long-term solution to the problem. There's a 25% match requirement, and it's based on, and this is only available when a disaster occurs, and it's based on how much money, public assistance money goes into a disaster, and it can be as high as 15%. You have to be what they call an enhanced state, which means you have an enhanced hazard mitigation plan. I believe Alabama is an enhanced state, so we can get up to 15% of the total disaster grants awarded by FEMA. More information is available at the link provided there at the bottom. Thanks. So here are some resources. These are just a few. I could have filled up 5 pages of resources, but this is a good place to start. These are some places that I go to for information, and obviously I put National Flood Services on there, and I was impressed with their website, and they have a lot of great information on there, and that's a great place to go as well. The Insurance Journal has some really good information on insurance, flood insurance, and so on. One that's kind of new to me, which I enjoyed, I get their articles regularly, is Insurance Information Institute. Some really good information is available there. And of course, FEMA, and FloodSmart is part of FEMA now. And they have some great information and training available there. Next. So here are some of the references that I used for this presentation, as well as just some other information I gathered off the FEMA website. These are some other places for information. Next. So the benefits to the NFIP through sound floodplain management, you can see there's some trends that have been observed over the past 10 years. Sound floodplain management strategies do matter. And compliant structures incur a minimum of 65% less flood damage on average, $2.4 billion in avoided flood losses annually nationwide, $1 billion in avoided losses over the past 40 years. However, the risk is still rising. 70% of costs this decade were sustained in the last 3 years, 50% more $1 billion events this decade than the previous, $1.1 trillion in flood and tropical disaster costs since 1980. So there's a lot of money still going out, but if we do better with our floodplain management, be more proactive, like higher standards and other mitigation measures, things can change. Next. And that's it.
Corey, thank you so much for providing all that valuable information. As part of the agency development team, we love seeing all the graphics, the infographics, and the tools that agents can use for their clients. And I am especially appreciative of the websites that you listed, because we're always checking our facts and making sure that everything is correct. And we like to know what else is out there to get some more information for these webinars and future trainings. But just to know, we'll be sending Corey's presentation as a PDF along with a link to this recorded webinar. And you can just check your emails for future webinars. But I wanted to just comment on something that stuck out to me. I'm surprised that there's not a lot of flood prevention in the state of Alabama.
A lot of what?
Flood prevention.
Oh, yeah, we don't have as much flooding disasters in Alabama as we do tornadoes. So
Okay.
Tornadoes have in the past decade been more of the problem. And, back in the 2000s and 90s, I think there was more flooding. But the main flooding in the past decade has been at the coast. So Baldwin and Mobile County has received most of it. So there's a lot of people that are very flood conscious, and a lot of efforts being proactive do occur in Mobile, particularly Baldwin, because you can see 27 policy holders, I think, are down there. I think it's like a quarter of the policies in Alabama are down in Mobile, or even higher, like 30%. In Baldwin County. So anyway, they're very aware of it. Birmingham has done a great job, and they have done a lot of mitigation. They've removed people from floodplain and actually turned some areas of the city into green space. So
wow, okay.
Good area. Yeah. So those are probably the 3 big counties for flood risk reduction right now.
Okay, that was interesting when you said that.
Yeah.
Cool. Well, awesome. Does anyone else have any more questions? Tina, I'm interested. Tina, where are you from? If you can hear me or you're on, you can type it in the chat box. I'm just interested. Oh, I don't know where she is. All right. Well, Corey, again, thank you so much for joining us today. We know that, Tina, she's in Chicago. Cool.
Oh, okay. Wow.
In Chicago, she's on the flood team for MGA Company. Great. Tina, thank you so much for joining us. And they rate flood for all 50 states. Okay, cool. Very cool. Thank you. Thank you so much for joining. Again, Corey, we know that you're busy. We're so happy that you were able to take this time, create a deck, and provide us with all this awesome information. we'll go ahead and send the PDF out to the people that were registered, and we'll have a copy of it. Sometimes a lot of people will ask us if we have the recorded version or if we have the deck, if they missed it and weren't able to sign up. But thank you so much.
Sure.
Best of luck, and
Thank
hang
you
in there.
too. It was a pleasure.
Thank you.
All right.
Have a great rest of the day.
All right. You too. Thanks.
Bye-bye.